Welcome, everyone, to tonight's Hookup with Real Estate Masterclass. We're super excited to have our special guest, Trevor Thompson, which we'll introduce in just a minute. But first, we have some housekeeping to do here. So, Ken, would you mind reading the disclaimer?
Yes, we appreciate you attending the Hookup with Real Estate Masterclass. We are not financial advisors. The content we provide is strictly for educational purposes and not intended as legal, financial, or investment advice, nor is it a solicitation for funds. Remember, participation in this program is at your own discretion. Real estate markets are subject to change and can be dynamic. Hookup with Real Estate and its representatives are not liable for any outcomes resulting from the information provided or engagements with third-party providers. Seek professional advice before making any real estate or investment decisions. By attending, you consent to this event being recorded and understand that internet security is not absolute.
Thank you. Okay. So I have a picture of our wedding picture here today because today is Ken's and my 36th anniversary. So normally we have a different picture, but
Congrats.
thank you.
Thank you.
Anyway, our mission is to empower aspiring and early real estate investors with exceptional education, invaluable skills training, and genuine opportunities to invest in real estate while simultaneously guiding you toward success in real estate and away from costly mistakes like we made early on in our real estate journey. And I wrote about that journey in the book, Real Women in Real Estate, which Trevor was a grand supporter of. So thank you, Trevor. And it's available on Amazon, or I can send a signed copy for $17 US with the code Hookup with Real Estate, or HUWRE. So Ken is a licensed New Jersey realtor. He's a veteran and a tile contractor. And if you're in the northern New Jersey area looking for real estate, this is his website, kenneth-hook.wickert.com. Now, we are powered by the Legends community. We are in this group. See Mike Bailey here, Trevor? He's one of your guys.
Mike, he's a good partner.
Yeah. And this is me. Ken wasn't here at the time. My mentor, Alex Lovely, and his wife. Okay, Brad Sumrock is here too. There was a lot of people in this event. But anyway, there's a lot of good education. I have to change this because they've changed it to the Legend stage, which is basically twice monthly. Now, we talked about skills training early on. This is a free community that Legends U puts on, and it's a great community. They have different challenges. There's training and no cost. So the link is school.com/real estate club if you're interested. And let's see, we're having a breakthrough session in event in Salt Lake City, July 25th through 27th. So there's an opportunity for you to join us. There is a fee for this, but it's going to be a great event, and it's at legendsbreakthrough.com in Salt Lake City. So, join me. I will be there. One more thing here. Okay, we did close an industrial property recently. This investment was for accredited investors only. There's an existing structure and a new development happening. And this property, although closed, they're doing a post-close raise. We're still raising about $250,000. So if anyone's an accredited investor and is interested, please reach out. Okay. So this is our calendar. Generally, we're the fourth Wednesday of every month, except for November and December this year, because we don't want to conflict with the holidays. Already into May, kind of crazy. Years flying by. We are almost, okay. There are two ways that you can connect with us. We have a YouTube channel on YouTube / the @hook up with real estate, all one word. And then we have a Facebook groups with an S page / hook up with real estate. So I encourage you to connect there. And then Ken, would you read the quote of the day?
Sure. For our own success to be real, it must contribute to the success of others. Eleanor Roosevelt.
All right. So our last quote was from Teddy Roosevelt. So I had to give the other half a little bit of acknowledgement. Anyway, now we get to the good stuff. I'm going to introduce Trevor. He's based in Austin, Texas, and he started his real estate journey in 2018, and he's invested in 32 syndications. And if you're not familiar with syndications, or a group of people get together to buy real estate, 20 as a limited partner, which Trevor will describe later, and 12 as an active general partner and sponsor. He has a mission to help 100,000 people invest in commercial real estate, earning double-digit returns to achieve financial independence for their families.
Private equity real estate. And I'm very fascinated with it. So I track the big people.
Excuse me?
You got to track them and try to become them. So, and again, everything that happens.
Sorry. Where did we go? No. Sorry. Anyway, going back here. Trevor is now an active sponsor, and he's very excited to be partnering with Massive Capital as Vice President of Investor Engagement. In this position, he's creating a community for investors where they also educate, inspire, and create a place for investors to feel part of an investor-friendly network. You can reach Trevor on his Linktree and book a Zoom call with him at Linktree with a period after the R and before the two E's /K Trevor Thompson. He's also avid on LinkedIn. And so we are super excited that Trevor's here tonight to talk about passive versus active real estate investing and which one is right for you. I will stop sharing and give Trevor the floor.
Awesome. Thank you very much. So just to warn everybody in advance, I talk super fast. I got way too many slides, but I'm going to go through them all really quickly. And at any time you have questions, you can put them in the chat. But I'll hang out as long as you have questions. And so I'm going to go through quite a bit of information, and I'm going to do, as I said, I'm going to do it pretty quickly. So obviously I'm here tonight and wish them a happy anniversary. So I'm super excited to be here. And you'll see tons of pictures of myself. I'm very vain. I like to put pictures of myself out, is what I say. So you'll see. So who am I? We've already described who I am, so I'm not going to go ahead and do it, other than I did 47 years in the attractions and entertainment. So we talked earlier, I started in Niagara Falls. I was actually worked at Ripley's, believe it or not, all through high school, did 18 years with Guinness World Records. Wanted to open one in Orlando, Florida. It didn't happen. Opened a year-round haunted house. Then I spent 20 years with iFly Indoor Skydiving. Opened the one in Paramus, very close to Donna and Ken's place. Opened 46 all over the world. So, and then I started investing in real estate. So the way I described my story was I was always interested in real estate, but I was afraid of toilets, tenants, and trash. And so I just didn't know. I wanted to be involved in real estate, but I just did not know how to get involved in it. Like many people, I read Rich Dad, Poor Dad. I was like, wow, But what did I do? I put it back on the shelf, right? And then I didn't do anything because I thought, okay, I don't want to do single family, but you have to be a millionaire to invest in commercial real estate. So I managed to get a decent payday when iFly got bought out by a private company. And so I started looking into real estate, and that's when I found syndications. So we're going to talk a lot about different things here. So every investment opportunity is different. I'm in 33 deals now, and not one of them are the same. They all have a different balance of risk reward. They all have different projections. They all have different timelines. They all have different returns, and they all have different tax scenarios. So it's a little bit overwhelming when you start thinking about it. The way I like to look at it, and I'm not a big baseball fan, but if you were a team and you said, every time I go to the bat, I'm going to go for a home run, right? We all want home runs in our real estate investing, but I'm here to tell you, you actually win the game by doing a couple of singles and doubles more regularly, because you're going to have a much secure, easier thing to do than always going for the home run. So you're going to want to balance that risk reward so that you have some investments that have a little bit less risk and a little bit more reward. So you always want to balance your risk, your reward, and the time. Some real estate investments can be as low as 3 years, some as 5, some are 7, some are even 10. So you need to understand that. And then there's unlimited asset classes you can invest in. Now, I've invested a lot in multifamily, but I'm also invested in medical, storage, development, new build retail, all different types. So you can balance out where you put your money by asset class. So again, I'm going to give you an analogy here. And if you go to my YouTube page, I actually have this. I think passive investing is like buying a ticket on an airplane. So you buy a ticket on an airplane, just the same as making a passive investment into commercial real estate. Your role is very similar. You've put money in and you're going to go on a journey. And your journey is your financial freedom journey, your trip on the plane, but you don't have any responsibilities. Other people have all of the responsibilities. So the general partners of the sponsorship team, they find the asset, they find the debt, they're involved with doing everything that you need to do. And so you go through different things, and their job is to keep your investment safe, just like on a pilot keeps you safe in the air when you're going through. Now, a pilot doesn't do everything, right? An airline has senior executives like the sponsorship team. They have a pilot who's responsible. They have an asset manager. That's kind of like the ground crew. They're the ones that are keeping the planes up and running and going and doing things. Then you may have the flight attendants. They're very much like the property management. They're the ones that are touching the residents that are there. Or if it's an office, they're the ones that are managing all the facilities. So you have this whole team, just like when you're on an airplane. And when you've made a passive investment, you don't have anything to do. So if I got on Southwest Airlines and somebody said, well, Trevor, guess what? You're flying the plane today. I suggest you all get off the plane. Okay, I really do. You should not go on that plane because I don't know how to fly a plane. I know how to sit in my seat. I know how to read my book or keep working or take a nap, but I don't know how to run a plane. And it's the same thing when you invest in somebody else. You're trusting them just like you trust an airline. And you're saying, I want to go on a financial journey, and I'm trusting that your mechanic fixed the plane, that somebody put fuel in the plane. You're going to take me to my destination, which in our part is financial freedom. So again, when you're done, they should be giving you updates too, right? Oh, we've got a little turbulence, some stuff's happening, this is happening, that's happening. We're getting through to the different places to go. And so you'll get an idea of what's happening. But your role in this investment is very, very passive. So we do have a question. About 50% of my investments are in the multifamily space. I do have a list of them here later on. I should know them all. So I'm going to talk, first of all, 7 steps to become a passive investor. The most important step is you need to learn the power of passive investing. A lot of people don't understand this, just like I didn't understand it. You know, I read Rich Dad, Poor Dad, and it really opened my eyes to the difference between what my house was versus this, the power of leverage buying everything. But until you really understand the power of passive investing, that you can give your money to somebody, and again, generally our goal is to double your money every 5 years roughly. They call that the rule of 72. You can Google that. And again, do they always double? I'm sorry, they don't. Sometimes you can lose all of your money. I had one deal that tripled my money in 20 months. I'd like a few more of those. I gave them $50,000, and 20 months later, they gave me $152,000 back. I really like that deal. I'd like to get a few more of those, as we all would. But you need to know the power of being able to have somebody else do this for you. You need to find money to invest. So clearly that sounds simple, but it can be a little bit. So for example, if you had a previous job and you have money in an old 401k plan, you can move that over to self-directed and you can invest that into real estate. You can obviously, there's lots of ways that you can invest into real estate. The only thing for this particular passive investments that I suggest you don't do is borrow money. I suggest that you don't borrow money. I tried it once and then COVID happened and I still had to pay my loan and they stopped paying me because COVID happened and there was a lot of things that happened. But again, you want to make sure you understand, how can I get the money to do these things? This is the most important one. Find somebody you know, like, and trust. And Donna will tell you, when you connect in this industry, it's very small industry, even though there's lots of us in it. And you can find out the people that you know, like, and trust. Alex, who she mentioned, he's somebody I know, like, and trust. We've been partners with Alex on several deals. We know Alex. I've been to his events. He's been to our events. And again, you want to find somebody you know, like, and trust. And I know Donna and Ken, that's why they've created this community. That's why they say who should come and talk on these things, so that you can find people. But who you give your money to is more important than where you give your money. I'm here to say it's the most important thing. So spend some time doing your due diligence. You want to find out what type of investments suit you. And it could be, I liked multifamily because multifamily, I believe there's a shortage of housing. At this moment in time, there has never been a bigger gap between what rents are and what your mortgage would be. In the last 4 years, it's almost gone 55%. And I got this number from people a lot smarter than me. So if you think about it, right? I'm renting apartments for $1,000 to $1,200 a month, but those apartments would cost somebody $2,500 to $3,500 on a mortgage. So again, the world sadly has been priced out of homeownership. You need to understand your investments, right? What are the risks? What are the rewards? There are no guarantees. So you need to understand, okay, when am I going to make money? What happens? How is this deal structured? Because every deal, as I mentioned, has a different structure. So you need to get educated, and then you need to ask the questions and say, okay, can you explain to this? This is what I need. I had a lady once was going to invest, and she says, well, I just got a settlement, but I need cash flow because I got to make sure I have money to feed my kids. And I said, well, this is not the investment for you, because it was an investment with very little cash flow. Very little cash flow. And you want to make sure that you know, what do you need for your money? I always invested for wealth creation. So my goal was, I'm going to be an active sponsor, get my fees, get my other things to live on, but I want to keep my money compounding. So again, that was my mission. And I've got a slide later on that's going to blow your mind about investing for wealth creation. Then it sounds symptomatic, right? I should have a Nike swoop here. Just do it. Okay. I thought about real estate investing for 30 years and I did nothing. I was 58 years old. I finally said, I'm going to learn about real estate investing. I went to my third weekend seminar. I don't know how many people have been to weekend seminars and going, oh, I'm not too sure about. I had one. They wanted me to pay $60,000 and they would show me how to buy a $30 million office complex on my credit card. Didn't sound too realistic to me. But then when I found about syndicating, I was hooked, right? So I had to do it. But I'll never forget the first time I sent in my money, I wired $100,000 to somebody I'd met 3 weeks ago. And I went, what have I done? Now, long story or short story long, he's now one of my partners at Massive Capital. So again, obviously I found somebody I knew, liked, and trust because now I'm partnered with them on a bigger level.
Mm.
This is the next most important thing here. When you passive invest, you're making money in your sleep. Remember, the syndicator is doing all of the work. If we believe this gentleman here who's made a little bit of money, if you don't find a way to make money while you sleep, you will work until you die. If you continue to trade time for money, eventually you will not have the energy to put the time in to get the money. You need to get your money working for you. Now, this is my favorite slide. Now, this slide has some, I'm going to tell you, very wild expectations. It assumes you always double, and it assumes you have no tax consequences. Okay. So if you were to invest $100,000, and if we could double your money in 5 years, it becomes 200. If you reinvested, 200 becomes 400. 400 becomes 800. 800 becomes 1.6 million. 1.6 million becomes 3.2 million. Again, it assumes that you always double your money and you've had no tax consequences. So what I want you to understand, this is one investment of $100,000 continuing to compound and be reinvested. Who on this call, if you were to do this 25 years ago, would $3.2 million change your family's life? I mean, this is life changing, right, Donnie? I mean, this is life changing, isn't it? This is
Absolutely.
just so powerful. So we all know the power of leverage on real estate, but we didn't talk too much about, and a lot of people don't talk too much, the power of compounding your wealth. So again, if we go back to my good friend, I just turned 65 and someone sent me a text that Warren Buffett created 90% of his net worth after the age of 65. How did he do it? The man keeps investing. His money never sleeps. His money is always working and working hard for him. Now, I got one more thing to say. If you remember before, I talked about you could move your money into a self-directed IRA. Because you got to remember, at some point when you pull this out and you start living off of it, you will have tax consequences. There's no doubt about it. But I want to talk to you about something a lot of people don't talk to you about. If you were smart enough to take this first $100,000, pay the tax on it, and put it into a Roth IRA. Okay, just get this. You got 100,000. Maybe you had to pay 20 or $30,000 tax on it. So you have $100,000 in a Roth IRA. I'm here to tell you in 25 years, because there are no tax complications on a Roth IRA, you would earn $3.1 million tax free. Where other than the great United States of America can you do something that crazy? This is the power of real estate. This is the power of passive investing and letting your money continue to work for you. So again, we got a little bit, yeah, I wish I'd have done it too. I didn't do it. So again, a lot of my lessons are my mistakes, making sure nobody else makes them. So there are two types of syndications, and I don't want this to be a big legal lesson. There are some that are a 506B. If I had a 506B opportunity, I couldn't talk about it tonight because I can't publicly do it. We have to have a previous existing relationship, and you must be considered to be a sophisticated investor, which means you understand the basic risk and reward. One other thing that a lot of people don't know is there's only 35 non-accredited investors allowed in any syndication. So again, this is a small number of people, but it's a way that the government has set it up to where non-accredited investors can invest in things that normally the wealthy can only invest in. Then opportunities switch to a 506C, which only accredited investors can invest in. And that means you have a net worth of more than $1 million, excluding your home, 200,000 salary single, or 300 married. And there's no difference between a 506B or a 506C. Now at Massive Capital, we do start all our deals as a B, because we want to give the average person, we want to connect with you, we want to get to know you, and we want to be sure that unaccredited investors can invest in things that the wealthy are investing in. Super important for us for you to start your journey quickly. But again, we have to have a relationship to be able to do that. So this is my long list. I'm not going to read them all. These are my 20 passive investments. So you can see there's retail. This was a commercial development, some more apartments. So a lot of different things, but these are all different deals. And then how many folks went to a weekend seminar and they told you, we'll buy our program. We're going to show you how to get brokers to give you the off-market best deals. You're going to hire a property management company and you're going to sit on the beach and the checks are going to roll in and you're not going to do any work. How many people have told you that? I was told that several times, right? Told that several times. This is not true. This is not true. This is not what happens. What it happens is you need a powerful team. You need to do a lot of work. The work actually begins after you close the deal. So I'm just going to go through some of the things. So again, I've talked all about being passive to now. So I'm going to switch a little bit if you wanted to be active. Okay. So for example, my first active deal was $240 in San Antonio. After 6 months, we couldn't close the deal. And I had $75,000 hard. You know what that means? That means I lost it. That's hard, man. That was hard news for me. I put a non-refundable deposit down on an apartment deal. I personally raised about $375,000. We just gave the money back. Again, passive investors had no risk. They got all their money back. And then my second deal, we had a whole things, and that was when the interest rates changed. And we had to again give all of the money back and we couldn't close the deal. So these were my first two attempts because somebody said, well, this is pretty easy. You can get it done. And I found out, it wasn't that easy. So then what happened was I managed to get on a deal in Columbia, South Carolina, San Antonio, and this one's right near me in Round Rock. Then I joined up with Massive Capital. So we've done, this is a development deal, apartments. This is a cool thing, X Space, if you're ever interested. This is like where high-end, eclectic, wealthy people get basically industrial office space. So you can actually park your Ferrari in front of your office inside of this building. It's crazy. Some more apartments, retail development, Horizon. My 13th active deal, this is one in Sealy, Texas. Again, I'm not here to promote a deal, but if you're something interested, this one is one that we are still taking accredited investors on. So one of the things they don't tell you when you want to become an active sponsor is you have to do all of these things. Look at how many hats you have to wear if you want to be a syndicator. You got to wear all of these hats. So when I first started, and those two deals I told you about, so I was trying to find people to partner with and do things. I walked 100 apartments, made 20 offers, and I got no deals. And I was like, man, this is really hard. Like, why? And I found out why, because I needed a team, right? So again, you want to become a syndicator. And again, you'll see a lot of funny pictures of me. How do I find a deal? So again, you go to these weekend seminars and they tell you, oh, call the broker and take him to coffee. The broker doesn't want coffee. He wants a multi-$100,000 commission check. He is only sending deals to people that he already has on their list that he knows are going to close the deal.
In Newton, and I bought it at stocks. I bought it in the 2008.
Lydia, can you mute yourself?
How it is appreciated in value.
Hold on, let me try that.
And I had a section. I paid most of the mortgage, but now the house pays. So
awesome. Thank you. So again, finding deals are super challenging. Whoop, did I mess up the presentation? Are we still good?
We're good.
Okay.
Still good.
Awesome. So then you've got to learn how to underwrite the deals. I'm going to be honest with you. You would think a guy that invested in 32 deals was an awesome underwriter. I'm going to tell you a secret. Me and XL have agreed that we just aren't going to be friends. I can read it. I can look at it. And I can break anybody's formula and mess it up. Okay, so I'm very careful. I would say send it to me on read only because I want to understand it. But again, you've got to understand how to underwrite. And you, as an investor, you want to make sure the team that's underwriting the deals is underwriting them realistically, right? They're underwriting them to be set to be normal, things that you can do, super complicated. Now, all of a sudden, you get a deal. I remember the first time I got a deal, I thought, what am I going to do? I don't know how to get everything done, right? There are so many things to get done. You get due diligence. We just closed on a 204 unit and we had 3 weeks of due diligence. We spent one day with 21 people and we walked 204 units. We did lease audits for 204 units. We hired electricians. We hired roof people. We hired HVAC people. We hired plumbers. And we had 3 weeks to do it all. And why does it sound all that important? You just kind of walk around and look at that. It's very important because if I miscalculate, it's going to affect my investors' returns. If I've underestimated anything, if I've missed anything important, sometimes deals, especially on a big apartment complex that's from the 80s, one thing can be hundreds of thousands of dollars difference on what you're going to do. Now you have to raise capital. I know Donna's had some fun raising capital, right? I remember the first time I raised capital, I didn't have anything. I did cut and paste emails because I didn't even know how to do mail merge. It took me 6 hours to send 180 emails. Okay, I know. You would think that I would be a little better off than that. Now we certainly are. I could have a lot more people, but it's super powerful. Now, again, I'm sure you've had this, Donna. Oh, yeah, you get a deal, I'm in. And I call you and say, hey, Donna, I got a deal. And Donna doesn't call me back. Why? Well, because she's really not ready to invest. She doesn't want to hurt my feelings. So again, it's super challenging, right? You've got to close a deal. And if you don't raise that money, you could be in serious trouble. So again, when you're investor relations, so what we do with our team, I've got a lady I work with. She's sweet as can be. If people aren't calling me, she calls them, and vice versa. I call and say, listen, I'm calling for Jasmine, and she's wondering why you're not calling her back. Okay, it works both ways, right? Where you can get things going. And again, when you have a team that you're relying on and say, okay, where are you on the leads? What help do you need? What do you do? It's a lot of things they're doing on moving parts. And then, of course, when you're closing a deal, there's a lot of moving parts when something happens, right? Again, all of a sudden now 200 people are looking at you. You're their landlord now as the sponsor. And you want to make sure that you're creating a good community. You're doing all the different things. So again, you hired a property manager because that guy told you, no, when you close, you just hire a property manager and you go sit on the beach and they do all the work. I'm going to tell you what a property manager is. There's somebody who babysits your children and doesn't love them. Okay, that's who they are. They're the babysitter that's stealing stuff out of the fridge, that's talking to her boyfriend or her on the phone because their job is terrible because they're dealing with the toilets, tenants, and trash. It's a tough job, and so they do as little as possible to achieve as much as possible. That's what they do because again, it's not a lot of money. It's tough to run some apartment complexes and deal with all of those tenants and all of the issues. So again, ever since joining Massive Capital, been able to do all of these syndications. I've raised $8 million. Our team has raised over $50 million. And the only reason I can stand here today and say I'm successful is because I have a team. I have a team of people. I know Donna's met several of the team. I know you met Jasmine because you were in, I think, in the same book as her. Or were you edition before or after? I can't remember, but
yeah, I was in the first volume.
you were in the first one. Yeah, she was.
Yeah.
But again, amazing young lady. So I'm part of a team, and so with a team, you can do all these things. Because if you remember, when you go back to one of the things I said on a passive investor, you want to find people you know, like, and trust. And would you trust an airline? If I told you, hey, I'm starting Trevor Air tomorrow, I've got no experience in the airline business, but I've hired Ken and Donna because they're nice people. And Ken said he could figure out how to fly a plane. And Donna's said she's always wanted to be a stewardess. Okay. And they're only signed up for the job because they were told that I'd let them see the world. Okay. Would you want to give me your hard-earned money? You would not, right? You want to give your money to people that are offering value, that are connecting with you. And again, I'm going to call it the know, like, and trust. So again, coaching, mentoring has changed my life. I did put my link to book a call. Now, I did mention my good friend Jasmine. So, oops, sorry, that's going to pop up on our screen there. If you are interested, if you're a lady on this call, you've got to join our She webinars. She does an amazing job, and it's all ladies that are joining. And then myself, on every other Tuesday, I do a webinar called Transformational Tuesdays. And so I'm going to put a link in here if you're interested in joining. Again, these are just all educational formats for you to be able to learn. This is sponsored. So every other Tuesday, there's a webinar from us. And then as Donna mentioned at the beginning, my goal is to help 100,000 people. So I have a story on this. So when I first set this up 6 years ago, or whenever I started, I thought 1,000 people was a lot of people. Then I read Grant Cardone's 10X and thought, well, you're kind of not pushing yourself, Trevor. You should make this 10,000 people. And then I started working with this other group, and the one guy said, oh, listen, with us now, we're going to change your mission to 100,000 people. So again, it's a lofty mission, but that's why Donna said, would you come and speak to people tonight? And again, I'm not saying you need to invest with me. I'm not saying you need to do anything. What I'm saying is, if you want to do this, I'm going to go right back here. Sorry. If you wanted your life to do this, when do you have to start? 25 years ago. Okay. So whatever age you are now, you got to look at this and say, okay, man, I'm an old guy. I'm 65. Maybe I only get to here. And again, that's why when I talked about how you invest, I invested this way because I wanted to do wealth creation and I wanted to do another way. So a lot of folks will say, well, I want to become an active investor so I can live off of my passive investments. And that's okay if you have to do that. But let me tell you, you put 100,000 in, you get 200, and you live off 100. How much do you have left? 100. And if you invest 100 and you live off 100 in 25 years, how much do you have left? 200. That's it, right? It doesn't grow. It doesn't compound. This is where the beauty is in passive investing. This is where the magic, this is where 90% of all millionaires became so, through this, their properties going up in value. So I told you I talk fast. I didn't see any chats for me. I think I answered the one question. But I'm happy to answer questions. I know I talked fast. Hopefully that was good. Oh, I see a couple of faces, new faces now I recognize. Good to see you, Chris.
So Jeff has a question.
Yeah.
He says, there's so many apartments that are having issues.
Yes.
And so many investors losing, yeah.
It is right now, again, all real estate has cycles. And this cycle, first of all, is unprecedented, right? So again, we had the crash in 2008. That was very much in the single family space, not so much in the commercial space. This particular crash that we're having here is definitely in the commercial space. So a couple of things have happened. And so what's happened with a lot of deals are they were financed on what's called bridge debt, where it was very high loan to value and it wasn't fixed rate debt. So for now, I've learned this lesson. I've learned it a hard way. I had two that have lost my money, and what it was they had 3.5% debt. They had 2 years interest only, and at the end of the 2 years, they couldn't get a new mortgage because they hadn't implemented their plan and do things. They got foreclosed upon. And yes, you can lose your money. I want to make sure you understand that. But when you're looking at deals, you want to look at deals with fixed rate debt.
Let me see. Alfred is saying, I am like this. I like the Schedule A call mortgage broker, William Morris, Endeavor Artist Mortgage Broker. I'm sorry, I don't understand that. You can come off mute, Alfred, and explain that. Are you a mortgage broker?
Thank you, Donna. I'm currently working as a mortgage broker and a EV car dealer.
You're a mortgage broker and say it again?
EV car dealer.
Oh, EV
Lamborghini.
car dealer.
Yes.
Oh, okay. There are in a couple of different ways that you can save your money to invest passively. That's great.
And then I
Yes.
also want to mention on the Jeff made a thing, big opportunity. This is a huge opportunity. Okay, so for example, I talked about our 200 unit. It was for sale for 21 million. We bought it for 16.9. Okay, I know Donna was involved in a property in Vegas. They bought it for a lot less, and they bought it for a lot less because they were in distress, right? So somebody's bad news is somebody's good news, unfortunately, because things cycle around and they can go.
Yep.
And so Warren Buffett says, when everybody's greedy, be fearful. When everybody's fearful, be greedy. Right now, everybody's fearful. So if you ever were thinking about starting, you are at the beginning of the going up, okay? Because everybody is fearful. It is time to be greedy. And, you know, and again, the other fellow said, I can't remember his name now, all of a sudden, you know, the time to buy real estate is when there's blood in the streets, even if some of it's your own blood. You know, so it's very, very important. And again, that chart I showed, you've got to keep your money moving. Because if your money's not moving and growing and it's not working while you're sleeping, with inflation, you're losing money for sure.
So, what are some of the biggest objections that you find from new investors?
So new investors, it all boils down to fear. And you know, and the people are afraid, right? Because again, it's a lot of money. $100,000 is a lot of money to people. But it's quite interesting. People will buy stock in the stock market without fear. And it makes kind of no sense because if you've watched the stock market lately, it's been a big roller coaster ride, huge roller coaster ride. But somehow, because we've been programmed, that's where we put our money. That's what a lot of people do. You know, you see other people making lots of money doing different things, you know, because again, a lot of the real estate people, you're not necessarily seeing how they're making money. And so again, you know, you've got to get them past that fear, and get them, you know, but I think fear right now is their biggest thing. And that's, you know, that's why I said at some point you just have to do it.
I mean, they could lose their money, so they have to be aware that there's a risk with every
Yeah.
investment.
But
So
you could also lose your money in the stock market too. So
A lot of money.
that is true.
yes, companies go out of business all the time in the stock market. So yes.
And again, and it's just because we've been brought up this way, right? Like I got a friend, he's got a substantial amount of money in his retirement pension. He actually hired a financial analyst who found out in the last 12 years he's made 4% on his money. 4% on his money. I mean, it's nothing, right? 4% on his money. You know, and this man has like a couple of $1 million in a pension, long-term civil servant, you know, worked all the time, contributed the max, topped it up. But a lot of people don't understand actually what's happening with their money. They just see a statement and it's up or down and they don't know why.
Yeah, that's a good point. So you talk a lot about know, like, and trust. So let's go there. How do you get to know a sponsor? How do you get to like them? And what's the key to trusting them?
So I think the first one is to do your research, to look around, right? So when I first started investing, just like this call, I was joining 2 a night. Okay, I was everywhere. You know, I was on all of Alex. I was on everywhere because I was on the hunt for people that I wanted to get to know. Then I wanted to find out, who do I like? Okay. And who do I like? Because I want to like you. If I didn't like you, Linda or Donna, sorry, I don't think I'd be on your call tonight, because it's so you want to find people you like, because I liked your mission. I like the fact that you were part of the book, and I've been a big sponsor of those ladies groups and different things, and I liked it. And I liked the community because their whole goal is to make other people better, right? So again, you want to look for folks like that. And then the trust, start going to some of their webinars and asking some questions and do different things. So you remember before I told you that somebody tripled my money in 20 months. I watched them for a year, and I actually went to a webinar that they did on a deal that didn't do what they promised. And some people that were on the webinar, I knew, they said, why would they do that? And I said, hallelujah, they did that. Because I want somebody honest, right? I'm okay that they learned something and they wanted to share what they learned so I could learn it too. And again, I mentioned before, right? We talked about some of the things. I lost money in 2 deals. And what happened was they didn't have fixed rate debt. They didn't have enough money in reserves. They had a short period of interest only. Their rate went from 7.5, or sorry, 3.5 to 7.5%. And again, will that ever happen again in our lifetime? I doubt it. I don't know. Where interest rates in 1 year would go from 3.5 to 7.5%. Never heard of it.
Yeah. No, that's true.
And also, in debt leverage is another big one. They were at 80% loan to value. Because again, that's what bridge loans, you could get an 80% loan to value. Right now, most of our deals are about 60 to 65% at the most loan to value. So again, it's a very comfortable rate.
Yeah, no, that is good. So have your deals gone full cycle, meaning
I've not had anything full cycle yet.
Okay.
Well, on the active side. On the passive side, I have. So again, I had one just give me my money back. Most of the others gave me back just about what they promised. They were quicker deals because they saw things changing and they got out quicker. I had 2 that lost my money and 1 that tripled my money. So on average, if you were to balance everything out of all of my deals, I'm still on track to double my money in 5 years, even with a couple of losses because I've had a couple of wins in there.
Yeah, no, that's awesome. What is your worst horror story you can share investing?
Well, it's the one, right? So it was 2 deals with a friend of mine here in Austin, and again, who would have thought that that interest rates would go from 3.5 to, and they didn't raise enough money they ran out of money. Then they couldn't fix the units, and if you can't fix the units, you can't rent the units. So all of those things, right? So again, what was good on the deal that doubled my money? So they had enough reserves, they had enough money, they implemented their business plan quickly, and they sold before the interest rates went up. So the opposite was they didn't have enough money, they didn't implement their plan quickly, the lending landscape changed, and they got repossessed. So 2 same facts, but 2 different scenarios. And one got out before.
Smart. Yeah. Javier has a question. Javier?
Hi. Hi, Donna, Trevor. Can you hear me?
Yes.
Yes.
Yes, I noticed that my internet is kind of slow, so please keep me posted if you don't hear me. And also hello to the rest of the guys. Thank you, Donna, for bringing Trevor here. I wanted to hear him at some point, so thank you so much. So my question is, I realize that the loans are the one affecting people because you hear a lot of good underwriters, but then because of the loan, they lost the deal. So do you think that do you think that people really should understand loans like perfectly before they go and jump to putting together a syndicate and investors or not?
Well, I'm not sure if I get your question correctly, sure, but so for example, we're only doing fixed rate debt right now. We're not doing any variable debt, all fixed rate debt. And again, on a couple of the deals, we were able to assume existing debt. So the 200 unit I mentioned, we assumed existing debt, and then we managed to get a supplemental loan, which is very much like a second mortgage at a much higher rate, but our blended fixed rate debt is still 4.45. And so we know what it is. So it's not going to change. What happened was on the bridge loans, again, a bridge was supposed to be, hey, you're going to really increase the value of this property. We're going to lend you a little bit more money because you're going to go from unstabilized to stabilized. And what happened was, because things became very unstable very quickly. And Austin itself, they put 28,000 apartment units online in 1 year. And so it put a lot of pressure on rents. And then they didn't have enough money in their CapEx. So when they kicked this person out because they didn't pay the rent, they couldn't fix the unit to put a new person in, and it started this downward spiral.
Thank
Did
you.
that answer your question? Oh, go ahead.
Not
Yeah.
yet, not yet. But thank you so much. That was like a very interesting experience. Yes, I noticed that I'm trying to understand the loans because when I have like 6 friends that wants to invest with me, and I explain them the whole game as I'm understanding it, and they don't speak English. So and they live in the US. So the problem is that when I try to explain them the loans, it's so complicated that for more that I go to ChatGPT and I hear you guys talking about loans, I cannot encourage them because I cannot even understand what is the play with the loan because of. So this is my question. Like, do you think that if I understand the loans, to be more straight to the point, I will be able to, like, I mean, after on the writing and knowing how to do it and having investors. So if I understand the loans, I should be like ready, right? Or I mean,
Well,
like, besides having a good team and people.
Yeah, you definitely need to
Please go ahead.
understand the loans. There's no doubt about it, because a loan can make or break a deal, right? And you need
Absolutely.
to understand. But again, on a fixed rate loan, your payments are what I'm going to refer to as known, right? You should know what your costs are.
Javier, did we lose him?
Got it. Thank you, Trevor.
Oh,
Does that help?
Yeah. Thank you so much.
yeah.
So
So
I can
Javier, sorry to interrupt, but when you're doing the underwriting, what Trevor was saying, they're underwriting conservatively now. So they're not going after the max loan that they could get. They're trying to raise the money or put down enough capital so they only get a 60% loan to value or 65%. So that means they're raising enough to put 40% down for a down payment so that the loan isn't, exorbitant for the property. So
Yeah.
there's a little bit of comfort
It's
that
not
they have.
overfinanced, basically, is what you're
Yeah.
saying, right? Yeah.
And this may be really too much to absorb here, but again, this was the one opportunity, and I go, no, there's a lot of numbers here, right? So this is the underwriting on our 60 unit in Sealy, Texas. But what I wanted to show here was the purchase price was 5.9. Our all-in project cost is almost 4.5. We're getting an agency loan of 4,189,000 at 6.45%. So it's a fixed interest rate. It's a little higher than we'd like, but it is what it is. It's a 10-year fixed loan amortized over 3 years, 30 years, pardon me, with 3 years interest only. So again, you can see year one, our debt service is only 270,000, 270,000, 270,000. And then in year four, we have to start making principal payments. So it's 327,000. And again, it's predictable. This is not going to change. This is fixed rate debt. And so you'll see there's all the other numbers, and they actually have 2 preferred share classes in here. And so this is how we can show you. So like in year 1, if we hit our projections, we only got $1,500 left. So this one's pretty tight to pay the full 17 pref and the 7 pref. I think these folks will get a little accrued, but on year 2, there's $55,000 left. On year 3, there's 84, 41, 56. So again, you've got to be able to show somebody, hey, this is it. Now, again, we're saying we're going to go from 792,000 to 913. It's a big jump on a pro forma. So you have to make sure you get over that. We're doing 5% rent increase, 8 year 2, because we're going to do a lot of improvements. But again, you need to be able to, I don't write these, but I can read these, I can understand them, and you want to make sure all of your costs and everything are in line, right? But you gotta know what is your debt service, right? So again, it's interest, and here principal, we're only paying a little bit off the loan near the end, 59 and 63. Hopefully that helped a little bit.
Absolutely. Yep.
Now, one other thing I want to make sure that your group understands, everybody talks about this thing called forced appreciation. So if you've not done much apartment investing or understanding in apartment investing, I want to tell you one thing that will, again, remember all my charts here. My goal is to blow your minds. So on our 204 unit, we're getting 8% rent bumps, which is $100. Okay, so on single family units or whatever you do, you're never going to beat the comps in the neighborhood, right? You're just never, no matter how much you do, you're just not going to get more. But on multifamily, you want to increase the net operating income. So just think of this at a 6% cap rate. If I can take 200 units and increase the rent $100 each, that represents $4 million in forced appreciation. So if I can take all 200 of those units, add only $100 rent to those 200 units, I bought that property for 16.9, let's say 17 million. Just on that one trigger alone, that property jumped up to $21 million in value. That is the power of multifamily and commercial real estate, because commercial real estate is all based on the net operating income. So think about that, right? Our rents are between $1,000 and $1,200. We're putting them up on average $100 times 200 units creates $4 million in value. So when people say, well, how can you get it worth more? You increase the net operating income. And again, you want to make sure you have a team that understands that, can implement it. Now, can we do 200 units in the first year? Probably not. It's going to take us a couple of years, right? Anybody who tells you they can hit their stride in less than 18 months, don't trust them. It takes time, right? Because people got leases, people got things. And again, there's this fine balance between keeping your occupancy high and moving tenants around, so I may not want $100 rent increase on Ken because my occupancy is going to blow 90 and the lender's going to say, hey, you need to be over 90% on your occupancy. That's where your debt service ratio coverage is and all these. So again, it's a little game, but when you can get it there, just think of that. That's how you force appreciation in apartments. It's pretty powerful.
Absolutely.
It is. So let's talk about a little bit about the investor communication as a sponsor, as an active real estate investor. How, if I'm looking to invest with someone, what should I look for in the communication beforehand, before I invest, and then after I invest?
Yeah, so before you invest, it's just going to be a lot about, hey, are you interested? How does this deal work? And making sure you're getting your questions answered, right? I'll never forget, I went to a webinar and they sent a copy of the webinar in a deck. And I asked a question in an email and they said, go to page 10 in the deck. I thought, goodness me, why are you making me work? You want my money. And I didn't invest, right? Because now I don't like you. So again, at the beginning, you want to make sure that people, and I mean, I had a dear gentleman, he invested in the Sealy apartment deal. I spent 10 hours with him because he really was just struggling to wrap his head around it, right? Because he'd done his whole life in his 401k and the different things, and he just didn't understand it, right? It was he had a couple of single family rentals, and he kind of understood that because he was in control. But to give out of control, it was super, super challenging. So again, you want to make sure that somebody is answering your questions, somebody is treating you again, it's a marriage almost, right? We're going to be married for 5 years. Some people's marriage don't even last 5 years. Not as good as Don and Ken here, but but you want to have people that are answering your questions, and then they give you specific updates. Now, sometimes there's big moments where nothing happens, right? I had a lady invested, and she invested very early because she wasn't accredited, and she wanted to get it. She wanted to get in, and every week she sent me a thing. Did we close yet? And I said, it's October. We're not closing until the end of the year, maybe beginning of the year. I explained that when we did oh yeah, I remember. Okay. And then next week I got a text, did we close yet? Because she's so excited to be an investor. And she actually came, there was a 62,000 square foot new build retail in Houston. She actually came to the groundbreaking. It was just dirt. You never seen a lady so happy that she had a piece of a dirt, and there was a picture of her investment on a board out front of a big bulldozer. It's super exciting. And then after an investment, you should normally get monthly updates, which include what's going on with the property and a copy of the financials, and then quarterly calls. Now, some people don't do quarterly calls. The one investor, again, who tripled my money, he does a biannual call, and he actually does all his assets in one call. So it's kind of like you can hang up after your call's done. I actually just listen to the recording and only listen to my because I reinvested with him instantly because obviously he was high in my trust factor.
Yeah. So that's good. And then do you do a newsletter?
We don't do a newsletter, but we do a bazillion emails. So if you ever get on my database, you'll get a million emails. But we do a property update, and we do a weekly email.
Yeah. The analogy
And
about
we do a
being
ton of educational tours. So anybody in the Texas area, like on June 19th, I'm walking one of our properties in Fort Worth. Every month we walk something in Dallas, Houston, or Austin or San Antonio. One of our projects, just educational property tours, and anybody's welcome.
Oh, that's a great idea.
Oh, that's interesting.
Yeah. We did one up in our property in Denver just because I happened to be up at an event up there.
Oh, cool. Cool. So, I mean, it's true what you say that you're going to be married to the the team for 5 years. So, in theory, you want to date them beforehand.
And again, go to events like this and meet people. This is where you're going to find your people.
Yeah, absolutely. And we talk about active and passive. There's other terms like general partner, limited partner. So maybe just touch on that for a second.
So a passive investor is considered a limited partner. And what that means is you have no responsibility, just like you bought the ticket on an airline, right? You're sitting on the plane. You don't have to drive the plane. You don't have to fill the gas. You don't have to do anything. And then active investor is called the general partner, the GP, and they're the active sponsors of the deal. And even within the general partnership team, there's lots of roles, right? So every deal kind of has somebody who's in charge. So let's call them the lead sponsor. There may be an asset management team. They're the ones that are managing the property. One other little tidbit is always look for people that have somebody with boots on the ground near their asset. You do not want to invest with people. So I live in Texas. I've got a partner in Denver. I've got a partner in North Carolina, and I've got a partner in Georgia, and they're the boots on the ground. You want to make sure that you're investing with people that know the area, can get to the area, can manage your property. Also, you want to make sure that you're investing with people that this is what they do for a living. When things were going great, a lot of the deals that are in trouble, they still have their Monday to Friday 9 to 5 job because they were told, just go ahead and do this, hire a property manager, and you can keep working or you can sit on the beach. You want to make sure that you're investing in someone who has a real team. I mean, we have $250 million worth of assets under management at Massive Capital. We have a full-time financial analysis. We have a full-time asset manager analysis. Now, they're not boots on the ground. They're actually both overseas, but super competent in what they do. They analyze all of our reports from our property managers. We do an asset management call every week where we go through all of our assets. We do a property management call every week, and we do a general partner call every month. So when on the general partner call, we update our partners. So let's say Donna is a partner with us. She comes to the call, we update her, and it's her responsibility to update her investors. Okay, because that's part of her fiduciary duty. She brought those folks into the deal. She doesn't have to do all the work necessarily, but she has to come and ask the questions and learn, and then make sure that her investors get updated. So you're looking for a group that has some of those things in place, right, where they can communicate with you, can talk to. It's nothing worse than anybody had a place where every time you turned around, there was some new sales rep taking care of you. It's like kind of frustrating, right? I signed up with this big legal firm, and I don't ask very many questions, but every time I did, I had a new rep, and they didn't know any of my history. It was super frustrating. So again, that's the know, like, and trust. Can I reach that person?
Yeah. So let's talk about analyzing, as a passive investor, vetting the deal. We have a question. Why are those asset managers overseas? Is it because
it's definitely value for money. You can get very high skilled people. So somebody that might cost you $300,000 in the US is $100,000 in India. And again, they're super high skilled. They can do all the tasks. They don't have to be, and they're not managing the projects. They're analyzing the data and giving us the data to manage the projects. So they're like a CFO. And then we have an asset controller, and basically they're analyzing all the reports and putting it on an easy to read dashboard for us that tracks all of our key performance indicators. And again, it's trying to be efficient. And when you reach a size, where you're managing, $250 million in assets, it's a lot.
Definitely.
Yeah.
So going back to, as a passive investor, how do I really vet the deal?
Yeah. So I have really sophisticated answer to that. My mama told me if something sounds too good to be true, it probably is. So if somebody sends you an email, they're going to triple your money in 3 years or 20 months like I did, hit the delete button. It's not probably going to happen. I got lucky and it happened, but they didn't present the deal to that. They presented they were going to double my money in 5 years. They caught the right side of the cycle. So you want to do some of that analysis, right? You want to look for realistic things in the projections. Are these projections reasonable? Are the way the deals set up, are they reasonable? In other words, do they take the investor approach into play? So I'll show you something quick here. Let me just pop up one other thing. Is it an investor friendly split? I'm going to call it, lack of a better word. So for example, let me just share this. And again, this is sort of taking reasonable things into consideration. So this is our one deal that I mentioned, the 200 units in San Antonio, right? So this particular property, what we're doing here is this is an average of an 8% cash flow, 2.2 multiple, 18% IRR, lots of big numbers. But what I really want to show you here is the 7% preferred return. What that means is until you make 7% on your money, I don't make any money. Mike Bailey doesn't make any money. Nobody makes any money. We're paying our financial controller at our own costs. We're not making any money yet. So if you look at the numbers here on year one, you put 100,000 in, you're only making 5.8%. So again, this is why I want to make sure I explain to people. Year two, you're making about 8.1%. It's going to take you to year 3 to catch up because this accumulates. So until you've accumulated 7 here, 7 here, 21,000 there, I don't get paid anything. Okay, I don't get paid anything. But after that fact, once I start making it up there, then it gets split 80-20, which means 80 cents on every dollar of profit goes to the investor and 20 cents goes to me. So you trust me to do the deal. I do the deal and I make sure you make at least 7% on your money. After you make 7% on your money, we're doing a split. So again, you want to look for things that have what I'm going to call an investor-friendly approach. So on this particular deal, right, over the 4 years, you're going to get about 33,000 in cash flow, about 90 from the sale. So you'll get 123 back on a $100,000 investment. So total here's 200, which is double your money.
Nice.
So again, you want to look at, are these things realistic? Are they reasonable? Have they, given you the data that you need to get to be able to do? So even down in here, I don't want to show you the whole deck.
But you have one that shows the business plan, like how you're gonna add value.
Well, this shows all the things that, let me just go through real quick. So this is the apartment complex here. This is really quick. I'm going to go through, this is where it is in San Antonio. So we bought it. It was a pretty rundown apartment complex. So again, you want to make sure that first thing you do is fix the outside because you want it to look nicer because you want people to pay more rent, right? So these were some pools that were closed down. So we renovated them. There was no pool furniture. We put in package lockers. Even though this is a C-class property, they get a lot of packages and the packages were getting stolen and then they were mad at us, but we didn't steal their packages. Somebody else did. So we put in package lockers. This was big, ugly cage that was out front. We tore it down, made the apartments look a lot nicer, resurfaced some roofs, resurfaced the parking lots to make the property look nice. This is our unit. This is what we're charging $1,200 for. This is a nice unit.
Yeah, it looks pretty.
You can see, and it's like 880 square feet. So again, this is a staged one, so we could get some nice, this was a model, so we could get people to go in. We improved the signage. That's what it looked like. It looks like now. So those are a lot of the things that we did to make it look nicer. Ooh, my thing froze. We added some signage out front. And then here's again our underwriting, right? So this was our 24 actuals. And then we do a year 1 performance. So we're saying we're going to do a rent increase of 5, 3, 4, and 4 because we're going to get the property gelling along. This shows all of the different expenses that happen. This is our net operating income, how we'll grow it. So again, initial bump of 6, then 3. We've accounted for higher vacancy at the beginning. So you can see here, we've got, $300,000 in vacancy, just under 200, just over, trying to balance it all out. We have exit strategy. So this is from CoStar where the cap rate, so they're estimating in our sale price that cap rate is going to be about 5.8 to 5.6. So again, we give you a scenario. Our goal is to sell at 6. This is what would happen if we sold early, if we sold there. If cap rate goes up, our profit goes down. If cap rate goes down, our profit goes up. So you just kind of show all the scenarios of what you're going to do to get the triggers to sell. So again, making sure that you understand all of those things.
Do you have a favorite to invest? Apartment, storage?
So it depends. So I really still like apartments because I believe we need quality places for people to stay. I'm also very bullish. We have a couple in new build retail. And especially if you know anything about Texas, Texas is exploding, right? On New Jersey, there's nowhere new to build, right? You got to tear something down to build. Texas is growing like crazy. So for example, I mentioned we're doing a retail development that lady invested in. It's in Richmond, Texas, which is between Sugar Land and Katy. It's a 62,000 square feet luxury lifestyle retail. And this will blow your mind. Median income in the area is $172,000. So again, this is people with money. We are part of a 450-acre development. We bought 8 acres at the entrance, and we have 1,000 feet of frontage on the main road into a subdivision. And the prices of the homes are from 550 to $2.5 million homes, and they're going to be driving by our lifestyle retail, which is not Domino's Pizza. It's, it's nicer shops. Dentists will be in there, hygienist, beauty shops, all the different things, a couple of nice restaurants. We've got a big community area where we'll do events and things. So again, you want to make sure that that's why I like that. And then my new one that I'm starting to get very excited about, and it's not because I'm an old man, but assisted living is really growing. There is a senior tsunami in America, and I'm getting part of it. We're all getting older. And what we've found is they've been doing, so part of our mastermind group, these folks just took on 5 homes in the Dallas area. And these are individual residences, average about 38 to 4,800 square feet, single story. They can fit anywhere from 10 to 16 people in them, and they're getting an average of $4,500 to $6,000 a month per bed. It's insane. So senior assisted living, and again, you don't have to have nurses, you don't have to have doctors, you have to have certain things. There's a lot of rules and regulations. You have to run them well. And the folks that are bought these 5 homes that are part of our group, they have a couple of other homes, super important. So someone asked a question about cap rate. Yes. So cap rate, by the way, cap rate is this funny thing that we don't control, but the economy kind of controls it, the age of the property, the area you live in, and interest rates. So the lower the cap rate, the higher the sales price. So the higher the cap rate, the lower the sales price. So again, when you're buying, you want a high cap rate. When you're selling, you want a low cap rate. But most people, when they underwrite, so we bought the San Antonio one at 6.5. But again, we bought it at a very volatile time. CoStar is predicting, like I said, it will go down to 5.8 to 6. So we picked 6 as our number, not wanting to be too aggressive. And if it goes less than that, we can make if it goes down a quarter point, we can make almost $1 million more. If it goes up a quarter point, we'll have $1 million less on our sale proceeds. So it can really, it's kind of like the trigger, the balance.
Someone was asking the minimum investment.
It's normally 50,000.
Okay. Alfred is letting us know if we want a hot rod.
Yeah, I'm going to put my contact info again, just in case anybody joined late. And again,
Yes.
I'm always happy to talk with people.
Okay, so let's just go and see. I'm going to put us in gallery view. And so someone said I'm a 506B and we're converting senior care. Oops. Got popped over there.
Yeah, so if it's a 506B, you shouldn't talk about it here. You just broke SEC laws.
Oh yeah, we can't do that. All right, we'll talk about it. Not here.
But I don't. Just again, I'm not gonna call anybody, but you got to be careful.
Yeah, so someone is asking, what is the ROI and timetable on 50K?
So our goal is to double
Uh-huh.
your investment. So you give us 50, we give you 100 back.
And it's
In
usually
5
about
years,
5 years, right? 5
Usually
to 7
about
years.
5 years, correct.
Let me see. I'm her group and I saw you in person.
That's fine. I'm okay. I'm just letting you know. I'm not from the SEC police. You just got to be careful.
Okay. Yeah, just be careful here because we are recording and then we don't want to get in trouble. Yeah. So I mean, that's just an important point, right? So one of the rules of 506B and C is about advertising. So,
And again, I don't want to belabor it, but you want to make sure that whoever you're giving your money to knows and understands and follows what you're supposed to do.
Yeah.
It's super important.
All right. Well, that was a lesson learned here.
Yep.
Okay.
So and there's lots of ways to look at return on investments. And again, we can go into a lot of detail. I didn't even talk about things like bonus depreciation on multifamily. By the way, everybody fingers crossed the big bill passed and it goes back up to 100%. Let me give you an idea what that means. Right now, if you put $100,000 in our project, you'll get about $26,000 passive loss on that investment. If you're a full-time real estate person, you can use the passive loss against your total income. If you're a passive investor, you can use the passive loss against your passive real estate earnings. And it's not a use it or lose it. So if you don't get to use it all this year, next year, it doesn't go away. But when they put it back up to 100%, a $100,000 investment would have close to a $60,000 passive loss to it. Significant difference if you really need. So for me, I'm hoping, because I don't pay any taxes. You know, love him or hate him. When last election, when he said he doesn't pay any taxes, it's real estate. That's why. And then he was the one who put that law in, and he's put it back in the big beautiful bill again. And again, it would be huge for people that can use that bonus depreciation. It's a powerful tool.
So we only have a couple minutes left, 5 to be exact. So who has questions? Anyone? Rebecca, I'm going to call on you. Are you
She's
there?
got a beautiful smile.
Yeah. Still with us? Oh, here she comes.
Hi there.
I am looking at the camera in the wrong place. No questions for now, but this was a great presentation. Thank you so much.
Well, thank you for coming.
Thank you for
welcome.
inviting me.
Now, I don't know how many of you are in New Jersey, but I was complaining when I was in New Jersey, you all honked at me. So
traffic. We do drive impatiently.
Aggressively.
Yeah.
Aggressively. Well, Dan's from Jersey. So Dan, do you have any comments or questions?
No comments or questions. Just glad to be here. Getting back into the swing of networking again.
Awesome.
Yeah, this is Gene. That was very powerful. I really like the way you express yourself, even though you do speak fast, but everything came out so clearly. Like for me as a newbie, I don't know if I'm still a newbie, but everything was, I understand what you were saying, no jargons, no nothing like that. So that was very powerful. Thank you.
Thank you.
Yeah.
So Javier has another question, but before we do that, if anyone's here for the first time and we don't have your email, please put it in the chat so I can add you to our distribution list. Go ahead, Javier.
Thank you so much. Yes, so in my case, that I'm not a full-time multifamily investor or operator, and I have a few people that I want them to invest with me. Do you guys recommend me anything to do for me to be able to have the guys investing with me? Thank you.
So again, I want to make sure I'm clear when I talk. I'm talking about much larger deals, right? You know, got $250 million in assets. We manage almost 1,800 apartments. I'm passively invested in a couple of thousand apartments. So again, I'm saying if you're going to take hundreds of thousands of dollars from people and you're going to go buy a multi-million-dollar property, I suggest you don't do it by yourself. I suggest that you get with a team. Now, if you're talking about, hey, we're going to go buy a sixplex and I've got a local property manager company that's my cousin, those are two different scenarios, right? So I'm talking about you giving your money to what I'm going to call a bigger syndicator. You make sure that they have a team and a system in place. There are lots of startups, lots of people that are buying properties. You know, one of his friends I know, he did this thing called house hacking. I'm sure you all know about house hacking. He was a military vet, or he was actually active duty, so he got a military loan. He bought a duplex, lived in the basement, rented the top of the duplex to a family, and rented 3 bedrooms to 6 military guys. Ended up paying 50% of it off. Turned around and bought a 8-plex, and then he bought a 12-plex, and now he owns a 20-plex. Would I invest with that guy? Absolutely, because he's living in the basement of the places he runs. He's and he still served his military. He had to go away on active duty sometimes. And again, he rented it. He knew his model, right? His model were people he was enlisted with. By renting it by the bed, he managed the people that came in for training and went out. Great things. So when I talk about that, I'm talking about if you're going to give me $100,000 and I'm buying an apartment complex, you better make sure I know what I'm doing.
Thank you so much.
Yeah, everybody needs to start somewhere.
Yeah. And Javier, I know you'll be on a team with a bunch of us who have some experience as well.
Yeah.
That's awesome.
And
All
again,
right, well,
I wish I could come to Utah. It looks like a great event. I've done much less. I was at every event for a while there, and now I've backed off. But I am going to do one thing that I bet you Donna doesn't even know yet, just so you guys can leave on a funny thing here. So, I told you I'm really active with our ladies group. There's a picture of me at an event in a wig.
Oh, goodness.
So we have a she group, the one I mentioned, and they always tease me, right? And say, oh, you could come to an event if you wore a wig. Anyway, so we were doing it in Houston, and Brenda, who also is in the book, I just dropped her off and said, well, I got something to do and I'm going to come back and get her after the event. Well, I came back in and waited for her to text me, and then came out of the men's room with a wig on, and
you're funny.
the event.
Funny.
If you can't have fun,
hey.
If you can't have fun, you got to.
Well, that's what made our marriage strong. Is humor. 36 years. That's it. Well, I do want to be respectful of everyone's time, but thank you so much, Trevor. This was really
terrific. Thank you.
Thank you. Appreciate it. It was excellent.
Yes.
Nice to meet everybody again. You got my contact there. Just reach out, connect with me. Pretty active on social media.
Yeah, and the replay will be up on our channel in about a week's time, and I'll send it out to everybody. Again, awesome. You can connect on Facebook, on YouTube, LinkedIn, wherever you need. But thanks again, Trevor.
Good night. Thanks, everybody. Happy anniversary.
Thank you. Good night. Thank you.
Good night, everyone.
Good night.
Thank you.
Bye.
That was excellent. Thank you, Donna.
Oh yeah, I'm glad you liked it.
Yeah, it was good. It was good.
Thank you, Donna.
Oh, you're welcome, Olu.
Have a good night.
You too. See you guys soon.
Good night, everyone. Thank you.
Good night. Thank you. Bye.